Okay, I think we're live. Um, Good morning, good evening,
Hey
and
Andrew,
hello. Hey,
good to see you
Brian.
again. How's everything been?
Yeah, good to see you. Good to see you. Yeah, it's been really busy. I'm pretty sure it's been as busy on your end.
Yeah. There's been a lot going on. Obviously, January was a very refreshingly good month for crypto. So we've been trying to do some research on exactly how it happened, why, and whether it can continue. That's our fun decision making we have anytime this happens.
All right, fantastic. Well, okay, so welcome to everyone who's just tuning in and joining us today. Today is Thursday, the February the 9th, 2023, and this is actually our first show for this year. We skipped last month. Um,
Yeah,
but yeah, so we're here. We're back. We're back. Okay. So I hope everyone's doing well. Good morning, good evening, good afternoon, and good evening, wherever you're tuning in from. And well, good evening to you, Brian. So as usual, we have our guest Brian Quinlivan from Sentiment. A very big and warm welcome to Brian. So I think we've done the mic test. We can hear each other pretty well. If you're tuning in, so don't forget to share, like, and subscribe. If you're tuning in from YouTube, always click on the bell icon and choose all so that you're notified every time we go live. Follow us on Facebook, follow us on Twitch, tag your friends if they're interested in this topic, right? So what are we talking about today, Brian? What are we going to look at?
yeah, we've got a few things going on. We're going to be talking a little bit about the large, mid, and small caps and exactly why there was such a differentiation and why there was kind of a major kind of rebound from these smaller assets in particular. So I'm going to try sharing my screen here and see what we can do.
Nice.
Okay.
Yeah, so I think we started off with some slight technical difficulties. I think that's all sorted now.
Yeah, I'm working off a different browser than usual, but it's nothing us in crypto aren't used to. So,
Cool.
but yeah, let me know if you can see this okay.
Yep. Yep, I can definitely see it.
All right, perfect. So, this is quickly becoming one of my favorite charts here. This is showing exactly what's going on with Bitcoin compared to altcoins at any given time.
Hmm.
Um, and the common trend throughout January, you can see that December ended. Basically, this was the first of the month. We had a big growth in shark and whale addresses. This is the combined holdings of 10 to 10,000 Bitcoin addresses, who generally hold about 2/3 of the overall supply. You can see back here in August when they were really thriving, they were holding, just under 69% of the supply, fell all the way down to 66.8%. And then they've been climbing all the way up until the fourth week of January when they suddenly declined right after this big boom. And we've kind of been ranging ever since, sitting right now at about 23.3K.
Hmm.
Um, and it's kind of interesting because we clearly saw that growth in Bitcoin holders uh, right up until here. And then that big drop kind of makes us hesitant because it's a little worrisome as to whether the prices can continue to stay up high like this, uh, or if they're going to fall because whales have clearly taken some profit now. They're still above where they were here, around the mid to late November area right after the FTX collapse, but
Yep.
they've kind of been ranging a bit. Now, a more important thing is the fact that stable coins, the sharks and whales there holding anywhere between $100,000 all the way up to $10 million, they
Hmm.
went berserk here. Especially, you can see Tether going all the way back to the second week of December. Big accumulation. That was a good sign that buying power is increasing.
Yep.
Another big leg up here, and they're still increasing now. They're actually at, I think, around a 6 to 9 month high in terms of how much sharks and whales are holding. So clearly, they're loading up, and it's usually not for the purpose of selling. So that can be a very promising sign. You can see in the yellow line here, DAI, they've also seen a lot of accumulation lately. USDC in blue here has been a little more up and down, but you can still see their big accumulation came around the beginning of November. And who knows, maybe this had something to do with FTX and a lot of people cashing out, including some insiders into USD coin. But you can see it's kind of been up and down. And then BUSD, it's been declining since the first of the year. But overall, I like that 3 out of 4 of these stable coins, the top 4 stable coins, are looking pretty good in terms of the key stakeholder accumulation that was going on.
Yeah, it's so how would we interpret that, Brian? Are the big whales accumulating stable coins so that they will redeploy into other coins, or are they somehow exiting other coins and then holding stable?
Yeah, I mean, typically we reflect it how much Bitcoin is moving down in tandem with stablecoins going up. And that was very much the case, going back to August when we saw that big local top here back when prices were still around 25K. Stablecoins were going up and Bitcoin was going down. So that was a clear sign that whales were cashing out Bitcoin for stablecoins, indicating that prices were likely to be going down, which is what happened. Eventually, we got to this low point, and we stopped seeing Bitcoin getting dumped by whales, while stablecoins continued to be accumulated. And that's a good sign, meaning there's more money coming from the outside, aka fiat, into crypto for the purpose of eventually getting into volatile assets that are not stablecoins. So this was kind of the sign, I'll even draw it right around here, that we were turning into a good, potentially bullish pattern. And you can see the line is clearly the bottom of where whales were holding. And it was just one day after the true local bottom of the past year. So that's a pretty good indicator in my mind that we had a turnaround in order beginning right here when Bitcoin began being accumulated again and stablecoins continued to be accumulated. But prior to here, this was a sign that there was a lot of dumping. Even with stablecoins moving up, it was just exchanging Bitcoin for stablecoins.
Right. Whereas where you drew that line, anything past that is where we're potentially seeing fiat money being converted into stablecoin. So the whales are just loading up and getting ready to deploy.
Exactly. So, I mean, of course, this is one of many theories, and nothing is a perfect science. We've seen anomalies before, but given enough midterm and long-term movement in the direction that makes sense for a dump or an accumulation, generally we see this kind of pattern play out well. So I think this was some nice alpha for sentiment users.
Nice. That's really cool. It's good to see.
Yeah. And then we had plenty of stories of large and mid caps going through a nice cycle, especially in the first half of January. We can see here we had a bunch of Hex and SHIB and Cardano, Shiba, I should say, and Cardano spikes in whale transactions way back in November. They got silent, and then look at this right around mid-January. This is when Shiba in particular, there was a bunch of profit taking, and up until recently, they were staying pretty silent. And then once again, we're starting to see a ton of action from the large caps, which could be a sign that they could have some movement coming in the near future. And like right around, I mean, it's no secret that pretty much all altcoins from especially around January 4th or 5th, they really started to boom. But large caps kind of went first, then it was mid caps, then it was small caps. And a lot of that has to do with whale transactions and when they are deciding to accumulate. We also had funding rates as a very important factor. And you can see right now, if we look at this, this is kind of the top 80 or so funding rate, average exchange funding rate data that we have. And almost all of them are long. You can see right here, Polkadot being one exception. But all of this red means that there is more longing than shorting right now. And that's
Yeah.
something to keep in mind, meaning that after the great January we had, people are now expecting that the price is going to continue to move up, meaning it is actually more likely, at least in the short term, to retrace a little bit to liquidate these greedy longs that are going on. If we looked at this exactly a month ago, it was almost all green, and everyone was trying to short, thinking that January would be a continuation of what we saw throughout 2022. So I think that's pretty interesting.
That is interesting. Cool. Suddenly the sentiment has shifted
Oh
a
yeah,
little bit. Yeah.
yeah. I mean, there's definitely a shift into more positivity right now. Let me show you what else we recently discovered. So we had some big shark and whale accumulation on Cardano. Let me make sure to switch over. There we go. Take a look at Cardano, which I know that you probably have viewers who are a fan of Cardano. We have plenty on Santiment. You can see how there was some big accumulation right here. So when you want to look for context of whale transactions, it often can come down to you see a big spike, like right here,
Mm-hmm.
and if the spike is occurring when, for example, the 100,000 to 100 million coin addresses are accumulating, that's a sign that these whale transactions are probably good for the price. If we see whale transactions here, right when the blue area chart showing the percentage that they're holding is dropping, that's a sign of negative price movement upcoming. So I always like to look at this. You can see accumulation and dumping all the time, but especially around the time of spikes, like we've seen the past few days, of the
Yeah.
amount of whale transactions. That's a really cool sign that we might see some good things coming in the near future based on how these two charts combine with each other.
Nice. That's interesting.
And as far as MVRV, I see that a few didn't load, but we can still go off of this pretty clearly. And we can see that most right now, after the amazing January that altcoins had, most are showing slight semi-overbought or overbought signals due to the average returns being overwhelmingly positive for them. You can see the 30-day returns for an asset like Phantom. The average trading return is plus 30%. The graph went on a recent surge. They're up 28% on average. So these are huge gains for a metric that normally hovers around 0%. And that's a sign that maybe short term, there's still a bit too much greed. And if you're holding on to some of those altcoins that have already, almost doubled or more than doubled just in the past 30 days, you may want to be a bit careful. And speaking of that, we can actually look at all the price returns. We'll go to 30 days here, 30 days here, and 30 days here. Switch from largest to smallest market cap. There we go.
Nice.
And what do we see here? Let's make it a little bigger. Okay. So we've got, Bitcoin up 33%, pretty incredible. Ethereum up 25%. And then look at all these assets that more than doubled. Hex, 119% gain. Aptos, 191. TMAC DAO, which I didn't even learn about until just a month ago, 557%. The Graph, 153. Phantom, 120. Decentraland, almost there at 87. Frax share, 139. This wasn't a top 100 asset a month ago.
Mm-hmm.
ImmutableX, also not a top 100 asset a month ago, up 115%. So you get the idea. I mean, these are staggeringly high numbers for a short period of time, and often just for purposes of kind of regressing to the mean, assets have to come down a little bit because you don't typically see sustained rallies at the same pace of January go on for multiple months before the fact that this is a zero-sum game starts adding up. And pushing some of those greedy FOMOers out before resuming a rally. That typically is how it works. And we've seen over the last couple of weeks, things have at least started to flatten out and cool down. And some altcoins have continued, other altcoins have retraced pretty heavily. It's kind of a mixed bag at the moment.
That's interesting. Yeah. Hey, so Brian, I've been following. So Litecoin's been a surprise for many. It's been going pretty strong against, in the last against Bitcoin.
Yeah, Litecoin recently jumped above $100. I know that, and that was a big, a big move for it after it really struggled, like most assets in 2022.
Yeah.
Let's take a look at some of its metrics here. You can see right now it's just below it at about $99. It was last above $100 back in May. So we're looking at about a 9-month high. The fact that it recently jumped back above. Taking a look at some of its on-chain metrics, we see the trading volume isn't too special at the moment. We had a very interesting spike in transaction volume on-chain wise in mid to late December. And this could have potentially foreshadowed that there was some buying going on here, because that was right when the local bottom hit, right in the center of this. And then it kind of went up ever since. We look at December 19th till now, price is up 58%. We can also see that as of yesterday, there was a big spike in daily active addresses. So we had the most unique LTC addresses interacting on the network since going back to October 19th. So that could mean something. Could actually mean that there's some profit taking going on, because $100, I guarantee there were a lot of limit sells that were placed around there as prices were rising.
Yeah.
So that would make sense. Looking at how overheated it is based on average trading returns. On the 30-day scale, it's actually not bad, despite the great run. Trading returns are only at an average of plus 7.7%. Usually we look at around something like right there, 15% or above. That tends to be like the danger zone, where when it's above, like we saw clearly right here, in late November, early December, we see a top. You get the idea. The 365-day returns are pretty high, though, at plus 38%. So it's an interesting case where you can see all of this time it was undervalued and traders were well underwater, meaning that all of this time was a pretty decent opportunity to buy, because you can see that any time from basically here on, from May up until this recent month, you'd be up money now. So long term, now it's a little more dicey. You have to be careful about whether you want to continue riding the wave. But on the short term, it's actually not looking too bad. So we're all about probability as it's sentiment. You just have to weigh those pros and cons.
Yeah.
Whales also. Yeah, go ahead.
Oh, I was just going to add. It's interesting when you looked at that long-term MVRV chart before, that you actually had time to accumulate. You had quite a long time to accumulate, and if you were, if you didn't have a lot of money and you were actually doing some DCA there, you just put in a bit at a time. And you had that patience, you'd end up okay now if you had done that. Yeah.
Absolutely. Yeah, it's always easier said than done. You can look at the charts and go, wow, all of these people, this price is getting crushed and all these people are getting crushed with it. Do I really want to buy and then just join all the people who have been getting crushed? And you have to kind of convince your mind, patterns do not last forever, even for bankrupt coins. We saw FTX's native coin, that they went on a run in January. Celsius, they had a little bit of a run as well. It's crazy. And sometimes people just want to pump coins because of the meme LOLs, and nothing else. So that's just how it is.
Crypto.
This is crypto. This is crypto. We have all sorts of crazy named coins that are just based on, look at Doge being a top 10 asset right now. Say what you will about it, whatever your opinion is.
Yep.
It's proof that prices of assets move up based on speculation. There is no company behind crypto assets the way there is for, Google or Microsoft.
Yeah.
So things can
Yeah.
wildly change in a hurry, just based on people's will.
Yeah. Yeah.
But yeah, besides that, I mean, I see the whale transactions. Look at all these yellow bars are all $1 million plus transactions. So we're looking one day at a time, and they were getting almost no 1 million plus transactions, or at least less than 100. And then all of a sudden in September, we get a 616 spike, we get a 589 spike, a huge bundle of them right here, where the largest was 704. The largest recently, just here in February, was 641. So Litecoin does some interesting things like this, where we suddenly just have massive whale transactions, and then it just goes kind of dormant. And oftentimes it's just like any other asset, it's kind of synonymous with price turnarounds. So if you see a price going down and suddenly a huge whale transaction spike, or bundles of spikes like this happens, could be a sign that you're on your way. But on the other hand, these spikes here might indicate that there's a lot of profit being taken because the price just went up about 60%.
Yeah. Yeah, that's right.
We could probably skip supply distribution because it's going to tell the same story as whale transactions.
Mm-hmm.
Notice the mean dollar invested age. It's starting to flatten out a bit, this curve. And that indicates that some dormant coins that have been sitting for a long time are finally moving around a bit. When they're not moving around, the line is just constantly moving up. But it's kind of started to flatten out a bit. Not completely. It certainly hasn't turned around and gone down. But this essentially means the average age of investments are starting to plateau and not just continue to age higher and higher. So for example, back here in February, the average age was 437 days for how long LTC has been sitting in the average wallet. And now it's up to 708, 712, somewhere around there. So it's changed a lot. But if it starts to flatten out and go down again, that usually is an indicator that a bull run is starting. So keep that in mind. Nothing special on the social dominance end. I do see that the weighted sentiment here, we calculate this by looking at the amount of volume, discussion rate of an asset, and multiply that by the positive versus negative ratio. For the higher it is, the more positive of a spike you'll get. And right now it's actually at its most negative. It's right around the same area of July and August. And if we see it really start to get negative, like back here in February, these are usually the signs of bottoms, and that's exactly what happened here. So let's see if people start to get a little more negative. I'm surprised they're this negative, despite Litecoin, just what was it, yesterday or 2 days ago, surpassing $100.
Yeah, I'm pretty surprised when I'm looking at the chart right now. Yeah.
Totally.
Yeah.
But yeah, I mean, I'm curious what your takes on the market are as well, Andy. What have you been seeing as you've watched prices begin to rebound in 2023?
Yeah, I'm thinking it may have to do with the latest press conference that Jerome had, right?
Yeah.
Where he indicated, what was it? Was it 25 basis points, right? Of
Very
an
small.
increase.
Yeah.
Yeah, yeah. And I think the market may have taken that as an indicator that things are looking better, but I to be honest, I don't really know. I'm thinking, is this a fake pump? I'm asking myself, is this a fake pump? I don't really know. I'm thinking, possibly it was from that press conference, and what was taken from what was said by Jerome, where it's a lower than expected, or at least it was on target of the rate, like the rate increase. But at the same time, you know, whilst I mean the market's been down for for over a year now, right? 13 months in. Like it started in what, January
Yep.
of 2022. So we're in Feb now. Um, yeah, I mean, it's not just crypto markets that are going up. I think I just took a quick look at Tesla's price, and and I think Tesla fell pretty sharply, but it seems that it's also on the way up, and it's by no way indicative of representing the entire market, um, but I do see, I would look at Tesla as a tech, a tech related
Sure.
sector, and that may be picking up potentially.
Yeah, I mean, a lot of people argue that crypto is kind of functioning for the last couple of years as just a high leverage tech stock. And
Mhm.
as NASDAQ, especially, just tech stocks in general, move up and down, so does crypto. You can see the correlation that really was going on, especially, going back to last year. Look how tight Bitcoin here in green and the S&P here in teal are to one another. And it really
Yeah.
stayed that way. We saw a bit of a separation here. Uh,
Mhm.
they weren't inverse or anything, but the S&P did a lot better in July and August of last year than
Yeah.
crypto did. But the real
Yeah.
separation happened right when the FTX disaster happened, and over 5
Yeah.
million people were impacted. The S&P didn't care about FTX. I mean, I'm sure it was newsworthy, but it didn't slow down other companies from thriving. Crypto, on the other
Mhm.
hand, lost a substantial amount of trust, and especially after the year that it had already been having in 2022. This was just a further indication that people who were out of crypto were going to kick it while it was down, and it stayed down while the S&P was able to recover, and then
Mhm.
they kind of started to equalize out again
Mhm.
right at the end of the year after the dust settled on that fiasco a bit, and then they went up together. And interestingly, the S&P continued to go up even
Yeah.
here in February,
Yeah.
whereas crypto's plateaued once again. So it's all kind of relative, even though these prices look like they're in tandem, like this is actually Bitcoin going up, 10%, 20% at a time versus like 3 to 5% for the S&P. Like they're all on their own axes over here. So it's kind of just how much risk do you want to have if you think that the entire world economy is going to go up, then right now being in crypto is probably a better bet than being in the world economy. But if you think that there's some uncertainty with the world economy, like a lot of people do, then crypto could continue to get hit harder than equities would. And that's a risk you would want to be aware of.
Yeah. Yeah. Definitely. Definitely. Yeah. Um, hey, so actually, if we could just spend maybe like 5 minutes, Brian.
Mm-hmm.
So with the when the whole FTX blow up happened, um, so Ren was a project that was that I had been following for a long time, but because it was tied in with Alameda Research and all that, and basically, I think the project pretty much, well, I guess with its association with Alameda, the community was trying to save the project, and I think that's been rallying a little bit in the last, I don't know, month or so. Um, I'm just curious as to what the charts look like for that. Um, but I know that I think they're trying to form a DAO. That there were proposals within the community on how best to approach it to salvage the project. Um, but yeah, I'm just wondering because it seems like it's still being traded, and it's still, yeah, it's been on a bit of a tear.
Yeah, it's still been kicking. I know that it had a pretty big drop right around the end of December and much harsher than the rest of the markets. So this was a big dip for it. But it recovered, and then in January, like a lot of assets, it was able to kind of pop back up. It had this decoupling here at the end of December, and then kind of ever since the start of the year, going right there. Yeah, I mean, it's up 57%, which is in line with what a lot of assets have done. It's kind of average almost for a mid-cap asset like Ren is, maybe even a small cap, some would argue. But yeah, I mean, it's had some pretty big volatility. It got above 11 cents, which a lot of people thought it wouldn't do again. And now it's back to just under 10 cents. Transaction volume's kind of been all over the place. We had a big trading volume spike right at the top because everyone was getting hyped about its decoupling here on February 3rd before it did eventually retrace a bit. Not a ton on the daily active address side. You know, for a recovering asset, you'd really like to see something a little more like this. And this, of course, was an anomaly. This was related to FTX and Alameda because you can see it was happening the 10th through 13th or 14th or so. That was right when it was all in the midst of its bankruptcy filing. But if we started to see some notable rising, that would be good. I do see circulation is looking a little better over the past week. These are some decent looking spikes compared to what we saw in, most of January. So that's something to keep an eye on. MVRV is negative for both 30-day and 365-day. So that means there's a tiny bit of undervaluation going on. Not much though. Not really much shorting or longing going on. You can see that, they tend to short when there are potential local tops, and they've lately been right, which is interesting to see. Usually they're not though. Whale transactions are interesting. These bars all represent $1 million or more transactions. So take these with a grain of salt. It's pretty much always getting zero, but every once in a while you see a big spike. It looks pretty clearly like this was the profit taking point because you can see if we just look at the 100K plus, this was the biggest spike we had seen in about a month and a half. So that was a good sign that there was something. Just like right here, look for a big spike like this. $6,600,000 or more transactions occurred on Christmas Day. And all of a sudden, the next day or the next 2 days, the price is up 40%. I wouldn't call that a coincidence.
Yeah.
So, I mean, that's the kind of signal you want to look for. Because this is essentially just a direction change indicator. When you see a big spike, even like right here, right at the top, that was the time to get out because prices were moving up a ton for Ren back in July and August. It's interesting here too. 100,000 to 1 million coin addresses. So we're talking about $10,000 to $100,000 mainly. They've been going up a lot, and those are definitely considered some larger shark addresses. There are 19 more addresses that have popped up with that size over the past 3 weeks. So that's a good sign. But yeah, I see some promising sign. Like even their dormant tokens are starting to move a little bit. You saw the big dormant token move right on Christmas Day. This was right before prices went up 40%. Like I said, when you see the mean dollar invested age line go down, prices tend to go up. Usually it's more gradual, but sometimes it's immediate, like right here. So it is flattened out right now, and I think that's worth keeping a close eye on. Supply and exchanges is also moving up. This is kind of natural when you see an asset go up 50, 60% in a month. People generally are trying to move their coins to exchanges and take some profit. So that I wouldn't be too concerned about that, but be more concerned if the price is flat, more like right here, and then you suddenly see a big movement. I mean, for all I know, like right here, November 3rd or 4th, this was right before November 7th and 8th when everything was announced that FTX was collapsing and the entire market went down. Look at how a bunch of Ren was moved to exchanges right around here. So I
Yeah.
find that interesting, to say the least. Usually big upswings in exchanges equal downswings in price.
Yeah. Yeah.
But yeah, you get the idea. That's Ren for you. They don't seem to be getting a lot of development, so keep that in mind.
Definitely not. I think I think a lot of supporters have left the community
Hmm.
because what they had. I mean, those they had that were leading it, or the original founders of the project, they left and they pretty much sold their stake to Alameda Research when that happened, and they were pretty quiet about it. And so when the whole FTX thing happened, I think even more people left the community. So all they had were a group of paid developers who were on Alameda's payroll. And so now that the payroll's no longer there, now they're trying to figure out how the community can come together to fund and pay for the project. So I don't know. I think a lot of trust has been lost in that project. So I'm just keeping an eye on it to see what like what comes out of this one. It's interesting. Yeah.
Yeah.
So I think we've probably come to time. Yeah. I think
Yeah,
we've
I
covered a
think
lot
so.
of ground today.
I think the last thing I want to bring up, as we discussed before the call, Andy, is just the overall cycle to keep in mind with crypto. Generally, in market cycles, when you suddenly see a surge in market cap, just the overall market cap of crypto, it kind of starts with stable coins, then it changes to large caps like Bitcoin and Ethereum. Then the Bitcoin and Ethereum profits move to large cap altcoins. Then those large cap altcoin profits move to mid cap altcoins. The mid cap altcoin profits move to small caps. And then the small caps tend to be cashed out for fiat. And then you see a retracement period. Where are we right now? It's probably arguably in that mid to small cap range at the moment. Doesn't necessarily always mean we're going to see a big downturn once the mid and small caps stop rising. But historically, that's been a trend and something to keep in mind. So I'm not suggesting prices are about to move down, but as a data analyst, I've seen these cycles work the way they have in the past with that kind of result. Um, so just be mindful of that after the pretty extraordinary surge we all saw in January.
Thanks for that, Brian. That's the perfect conclusion. I'm just gonna leave it there. I'm not even gonna add any more. That was perfect.
Yeah, thanks, man.
Yeah, yeah. No, thank you. Look, once again, thank you, Brian, for coming on and sharing. Your knowledge and your analysis with us. It's great, and I'm looking forward to seeing you next month, every second Thursday of the month, guys. Yeah,
Absolutely. Excited to
yeah.
be back on track with this. I'm looking forward to talking in March. And thank you all for joining and watching Andy and I. Don't forget that Equities Tracker is the code you can enter if you would like to go to our pricing page and get a free 1 week trial. And if you want to purchase a long term subscription, it's only $49 a month. And you can get, I believe, 25% off using that Equities Tracker code. So give that a shot if you're interested. And um, we're always available on Discord. We have our own server that you can find on our Twitter, and we're here to help. So take care, everyone. And thanks for having me as always, Andy.
Thank you, and thank you, Brian. Have a good one.
Likewise. Take care.
Bye.